from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Didi is done. The Chinese ride-hailing app is officially planning to delist from the U.S. Why this could be just the beginning. Plus, Omicron keeps spreading, showing we're not done with the pandemic yet. How that's impacting plans to get back to the office. And top tech companies like Activision Blizzard and AMD are still not in compliance with a new law putting women in the boardroom. The deadline is just 3 weeks away. But first, it was the slowest job growth in the U.S. so far this year, despite unemployment falling. Given this mixed report and on top of the news that the Omicron variant is spreading, the U.S. Labor Secretary says he remains optimistic. He might feel good, though, about where the economy is headed. However, investors don't seem to agree. Let's get to our Ed Ludlow with a look at where things stand. Ed?
Yeah, look, we're taking the jobs numbers in our stride. It was a mixed bag, but the main takeaway for markets, it doesn't change the outlook for the Federal Reserve and its rate policy going into 2022. What do we see? Selling of risk assets, and tech shares really bore the brunt of that. Look at what's on the board, specifically the NYSE FANG Plus index, that kind of gauge of mega cap tech stocks and Chinese ADRs. They really bore the brunt of the selling. It was actually down by the most in one day since March, the biggest weekly decline since March of last year, as investors pull out of those stretch valuation tech stocks. Also, the Golden Dragon China Index. This is an index of purely US-listed Chinese companies, down significantly by the most since 2008. And of course, we'll come on to Didi in a moment. Also, broadly, cryptocurrencies were sold off as part of that. Coming into my Bloomberg terminal really quickly, I don't want to pick on one company, but let's talk about Meta, the company formerly known as Facebook. Since September, we've dropped almost 20%. Now, that is bear market territory. It's kind of become the poster child of this selling that's associated with the outlook for higher rates impacting tech stocks with stretched valuation. So I think we're down sort of something like 19.7% since a peak in September of $380 a share. It'll be interesting to watch that one to see if we enter technical bear territory. And finally, let's talk about Didi, a really significant drop. In fact, the biggest one-day drop since the company listed, which was only in June. It's trading at its lowest level since June, and the company's announced that it will delist from US exchanges, instead listing in Hong Kong. A lot to unpick there, but it certainly had broader ramifications for equity markets on Friday. Emily.
All right, Ed, thanks much. I want to stick with that big news from Didi and the broader implications of it all. I'm joined now by Bloomberg's Crystal Z, who covers public markets for us. So, Crystal, Didi plunging at the close, more than 20%. Walk us through what happened and what this means next.
Yeah, so Didi hasn't listed that long ago, and when we sat here right after the listing, we were hearing about how the Chinese authorities actually told Didi not to go ahead with the listings before they went ahead, and now they're having to unwind this whole thing, and they have to delist from the U.S., and they're considering relisting in Hong Kong, and the timeline they're looking for is trying to list by March, which is a little bit ambitious. I think what is interesting is that the entire ADR today is down. JD is down, so there probably will be bigger ramification in the U.S. market for all of these Chinese technology companies that listed in the U.S. since 2014.
What are the bigger ramifications that you see coming?
Yeah, so a lot of the ADRs are down today, and there should be more pressure from the Chinese regulators on other stocks as well. We have already seen a little bit of a homecoming, starting from Alibaba, where they also listed in Hong Kong as well. So you could probably see that as an insurance policy, where if anything happens to your your listing in the US, you already have a Hong Kong vehicle. I think what is really interesting is what hurdle Didi may face listing in Hong Kong, because Hong Kong's regulator, the SFC, operates a little differently as the U.S. regulator. You have to be fit to list in Hong Kong. You need to not just tick the boxes, but you need to be considered fit as a public company. So even though they passes all the political check marks, having to pass the Hong Kong exchange laws, having to convince investors again the second time within this short period that they should invest again, that would be a very, very big task.
All right, Crystal Z, thank you much. We'll obviously continue to follow and be watching that relisting a few months from now. Meantime, NVIDIA shares saw the biggest intraday drop in a month after U.S. antitrust officials sued the semiconductor company to block its $40 billion takeover of chip designer ARM. Let's get straight to our Bloomberg News reporter, Ian King. Ian, what are the main points of contention with U.S. regulators here?
Yeah, I mean, what the FTC has said is really what NVIDIA's rivals have said all along, which is how can we trust one of our competitors to be the owner of this technology that we fundamentally all depend upon? How can we trust them not to prioritize themselves? And really that's what the FTC has said in bringing this case, and it reflects really what's going on in Europe and what's going on in the UK to an extent as well.
So what's next? I mean, clearly they've got these challenges in Europe, now these challenges in the United States. It certainly doesn't look good.
Yeah, no, I mean, we put in our story, there was a Citibank estimate that said, look, the chances of this being completed have gone from about 30% down to about 5%. So really, all along Wall Street hasn't really expected this deal to close, and now they really don't expect it to close. So then that turns the conversation towards, well, what does ARM do? What does SoftBank, which owns ARM, do with this asset going forward? All eyes are really expecting on when will NVIDIA give up on this. At the moment, they're saying we're going ahead.
This could be a huge loss for SoftBank, right? I mean, what are the numbers we're talking about here?
Yeah, I mean, you mentioned this NVIDIA stock has gone down today, but this stock has been on an absolute, tear up until basically today. And that has massively inflated the value of the deal, which is paid for in large part in NVIDIA stock. Originally the total deal was worth $40 billion. By our calculations alone, the stock portion up until today was $57 billion. So obviously blown past where the deal was done originally. So SoftBank, if the NVIDIA transaction doesn't go ahead, has got to find something that's going to replace that. Going to be tricky in an IPO.
So what does this mean for NVIDIA's plans? I mean, let's say it doesn't happen, looking unlikely. What does this mean for their plans to become the king of chip design?
I mean, this has been an interesting idea in that really today was the only day where you've seen any kind of stock reaction correlated with any news on this deal. Investors all along have been nice to have, but guess what? Jensen Huang, the founder, he's doing a great job. They've created this new data center business. They have all of these other new technologies lined up that, NVIDIA is extremely well positioned, regardless of whether it gets ARM or not. Of course, ARM would be nice to have. It would diversify its bets, but NVIDIA can still use ARM technology and move into other markets anyway. That's at least been the argument that investors have had. So no real fundamental concern about how this positions NVIDIA.
Okay, we'll keep watching. Bloomberg's Ian King, thanks for the update. Coming up, we will have the latest on the spread of the Omicron variant, including a warning from President Biden's chief medical advisor, Dr. Anthony Fauci, that many more cases are guaranteed in coming days. Our interview with him next. This is Bloomberg. Google has once again pushed back the date for its employees to return to U.S. offices. The decision comes with renewed concerns over the spread of Omicron. The company had set January 10th as a return date for the bulk of its workforce to be back in the office 3 days a week, but Google says it will reassess in the new year. Well, a short time ago, my colleague David Weston spoke with Dr. Anthony Fauci, director of the National Institute of Allergy and Infectious Diseases and chief medical officer, of course, to President Biden. He began by explaining what officials are learning about this new variant that's now been detected in at least 7 U.S. states.
They're getting more and more information on 2 fronts. One is what the profile of people who are getting infected. In other words, we're trying to find out if there's any degree or not of protection, whether or not you're unvaccinated versus vaccinated versus having been previously infected. So that's going to be very relevant, because the ultimate question that's going to be important for us here in the United States is, if you have been vaccinated and boosted, given the mutations that this new variant has, what is the chance of protection against infection, and if not infection, against severe disease leading to hospitalization. So we're learning about the severity of the infection and the profile of the people who are getting infected. As you well know, we are starting to see cases literally, every few hours to a day or two in the United States. And as we approach the weekend, we're going to probably see more and more, because once it is here, there's no way that you're not going to see more and more cases. The real question is, in the fact that we have a background of Delta variant, which is very dominant and has essentially pushed all the other variants off the board, where is Omicron going to be in relationship to Delta? Will it take off and become the dominant variant? Or will it essentially get a bit smothered by Delta the way all the other variants? The only way we're going to know that is to wait and see. And that's exactly what we're doing. But we are getting important information from our colleagues in South Africa. I have a Zoom call with them tomorrow morning, so we should get another update in the morning.
So let me ask one question specifically about South Africa, because there's some information coming out of South Africa that the number of cases is going up, which is not a surprise. The number of hospitalizations, I believe, is not going up, certainly as dramatically. Should we read anything into that, or is it possible that's just a matter of a delay, a lag, as it were?
I think the latter. In order to get a feel for the relationship between infection, a high degree of symptomatology, hospitalization, and ultimately death, you've got to have a lot of patients get infected, and you've got to follow them for at least several weeks. So although it is encouraging that they're not seeing any concerning signal, like all of a sudden a lot more hospitalizations, that is comforting, but it isn't definitive. We really need to wait until a lot more people are recognized and identified who get infected to be able to make any determination about the degree of severity.
Dr. Fauci, if we go all the way back to Monday, a whole 5 days ago now, when we saw you with President Biden, what do we know differently from what we knew then about this Omicron?
Well, we know that it's here in the United States, which I actually, wasn't anything brilliant on my part, but we predicted that when you see it spreading throughout countries in Europe and Asia, obviously you're going to see it here in the United States. The real big question that we don't know now is what I mentioned just a moment ago, is how is it going to fare in a world, and the world being our country, in a world in which Delta is the dominant variant? That's going to be a very interesting situation to watch.
All the way back on Monday, you said, as you suggest, it's going to come to the United States. You were right. Let me ask you a different question. Community spread. Is it inevitable at this point? Do we already have community spread in this country? Because that may affect questions of travel restrictions, right?
We absolutely have community spread in this country. We have community spread with the New York, Minnesota case, where someone was in Minnesota, went to a conference in New York, got infected, and people with whom he had contact with also got infected. We don't know how many of them, but there's no doubt that there's community spread.
You can catch more of that interview at Bloomberg.com. White House Chief Medical Advisor, Dr. Fauci. Meantime, Twitter's new CEO has wasted no time making his mark on the company. Days after the departure of Jack Dorsey, new boss Parag Agrawal has restructured the executive team with no less than 2 department heads stepping down. Dantley Davis, who ran Twitter's design and research, is leaving the company, as is Michael Montano, engineering lead. Twitter says these moves are part of an effort to, quote, drive increased accountability, speed, and operational efficiency. Coming up, the need for more diversity in the boardroom. Activision Blizzard is one of several companies that need to add more women to their board of directors, and soon, in order to comply with California's gender parity law. More on that next. And let's take a quick look at DocuSign shares plummeting in its biggest intraday drop ever after the e-signature company's revenue forecast for the current period fell short of analysts' expectations. At least 4 firms tracked by Bloomberg downgraded the stock, saying it'll take time for DocuSign to get sales growth back on track. This is Bloomberg. keeps advancing towards his goal of selling 10% of his stake in Tesla. According to a filing, the world's richest person offloaded another $1 billion worth of shares in the electric car maker. The purpose of the share sales are to help him offset taxes. Musk has now sold about 10 million of the 17 million shares he'd need to reach that 10% threshold. And the deadline is fast approaching. As we near the end of the year, some major companies have yet to add more female executives. Activision Blizzard and AMD are among companies that still need to comply with a California law requiring, among other things, that companies with boards of 6 or more directors need 3 women by the 31st of December, or they risk a big fine. Both Activision and AMD only have 2 women on their boards as of now. Let's talk about this and more with BoardSpan CEO Abby Adlerman. Abby, great to have you back with us. Activision and AMD are lagging. Is this a surprise or no?
Yeah, it's a little bit of a surprise just because they've had plenty of notice and there's been a lot of talk about this subject. So there's not a lack of supply of candidates. It's probably a little bit of a lack of motivation.
Do we expect them to add these directors before the end of the year? We've got 3 weeks left.
I think every company's sort of touch and go. I would say I think we're going to see a rash of appointments in the next few weeks because people don't want to be called out. But there's a lot of companies that are resisting sort of the sense of having some pressure around it. And it's a pretty big number, as you know, Emily. Over half the companies are not in compliance. That's a lot of board members to come out in the next few weeks.
Absolutely. There's a trial underway right now to determine if requiring women on boards is legal. Where is that headed?
Yeah, I think it's probably pretty risky for people who are advocates of this law because there's a lot of questions. Even when Governor Brown signed that law a few years ago, there were questions about whether it would hold up in the courts. But I want to point out that it's a lot more than just a legal issue. I think what's really at stake here is the court of public opinion. And that's where the law, whether it gets through this trial or not, that's where the law's had a really, really big impact. And a lot of people are pretty happy about the visibility it's given to the issue.
When are we expecting a result of that particular trial?
That could take a little bit of while, and it really depends upon, how long the deliberations are going to be. So I'm not going to predict the outcome of the legal system. I think we've all found that could be a little risky. But I will say that I think regardless of the outcome there, I think the statement has been made. And the statement by people who support the law and the people who are against the law, I think is pretty clear.
So let's just play this out. I wonder if some of these companies are thinking, hey, we might not have to do this if the law is deemed illegal. If it is deemed illegal, what happens then?
So, the interesting thing is, what's the penalty for not complying with the law right now? It's actually not that big in the grand scheme. It's $100,000 to $300,000, depending upon, how many infractions you have. And in the grand scheme for all these companies, that is really pocket change, at best. I think the bigger issue is how investors are perceiving it and some of the other constituents. And what we're hearing more and more, and you started off with Activision is a great case, thinking not only just from the major institutional investors, but the employees and even the customers. And that's where the voices start getting really loud. And I think that is pretty much a permanent change that we're going to see, regardless of whether it becomes a legal or a regulatory issue. People are demanding.
How much progress?
Sorry.
Exactly. Well, my next question was, how much progress would you say we made in the last year alone?
Yeah, I think we made some pretty good progress. I mean, California is up to a little over 30%, and that's good progress. I think a lot of people are going to be pushing for 40 or 50, but I think the trend is set. And even if companies aren't going to get to that true goal, I think we're not going to go backwards. And that's really what I'm counting on. Now, I might be the optimist, but I talk to an awful lot of boards, and that's what I do all day, every day, as you know. And I'm hearing a real commitment to diversity, and that's what gets me excited.
And what about Silicon Valley? Obviously, Silicon Valley makes up a large part of California, but does Silicon Valley still lag the broader industry, broader corporate America, or are they catching up?
Yeah, no, they do, unfortunately, and it is really specific to the tech industry. As you refer to Silicon Valley, one of the challenges, and we get asked about this a lot, is why is tech falling behind? And I think it's a combination of a few things. First of all, tons of growth companies, so they tend to be a little bit smaller. But also there's kind of this funny, insular, almost clubby feeling within Silicon Valley. And here's the ultimate irony, Emily, which is Silicon Valley, people are very used to taking risks, whether they're the tech companies themselves or the VCs that are funding them. Yet it's a really risk-adverse move, in my judgment, as to why not diversify your board. Because diversifying your board is usually about bringing people onto the board that are not the people that are most like you, right? So you really have to be intentional about thinking about wanting something different. And that feels risky to a lot of people. And that's why I think Silicon Valley is lagging. That said, I'm an optimist, and I think as people lean into it and think about the benefits, it does change.
If we can build self-driving cars and rocket ships to space, then certainly we can find more women for our boards, right? What other, quickly, corporate governance issues are you following into next year?
You know, the big issue on everybody's mind is ESG, and it's not unrelated to diversity. That is going to be a subset of it. But I think right now boards are really trying to wrap their heads around what does it mean to be a high-performing board with ESG? How as a company do we deliver? How do we even report? Because it's really vague. So that is a huge issue. Another really big issue is going to be around succession planning for CEOs. We've seen a lot of real-time stories even this week about companies and boards not being prepared for how to sort of grow into their next management roles and how to have somebody waiting in the wings. So I think that's going to be a really hot topic as well.
Boardspan CEO, Abby Adlerman. Abby, thanks for bringing your perspective here to us today. Coming up, another industry where there's a gender imbalance, and that is crypto. Twice as many men than women own crypto. What one platform is doing to bring more women on board. That is next. And as we head to break, Bloomberg has learned that Sony's PlayStation division is planning a new subscription service to compete with Microsoft's Xbox Game Pass. Sources saying the service, codenamed Spartacus, will allow PlayStation owners to pay a monthly fee to access a catalog of modern and classic games. This is Bloomberg.
Overall, a strong report.
Much better than the headline would suggest.
It's a good report across the board.
The headline number was a bit softer than we were expecting.
Jobs growth was disappointing.
A lot of that looks like seasonality and the impact of seasonal flows.
It's exactly the kind of report that the Fed actually wants to see.
There's no ambiguity. I mean, the Fed has a window to move, and obviously they can take advantage of it.
They have to start moving.
They have to move.
Our base case is for the first hike in June, but the risks are certainly tilting towards earlier.
They have to make up that lost ground, and maybe that means faster hiking rates.
If you go faster than you normally want to go, you risk breaking something.
The Fed now is looking at raising rates into a decelerating growth backdrop. We think they're going to have an awfully hard time doing that.
The Fed is going to have to be very smart, both in what it says in its communication and its in policy implementation.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Guests on Bloomberg Television there reacting to the latest jobs data showing the slowest growth in payroll for a year. Let's get back to the markets with our Ed Ludlow. Ed, investors have had a lot to digest this week, and that risk-off mode has hit crypto as well.
Yeah, exactly. I mean, if there was a consensus on Friday, it was that the jobs data didn't have enough to change the course for the Fed. It didn't have enough to change the outlook for a tapering or a rate rise. There was a sell-off in risk assets, and cryptocurrencies joined the fun. You see the Bloomberg Galaxy Crypto Index, that kind of gauge of the main cryptocurrencies, down 6%. Of course, we trade 24/7 in the world of crypto, right? So we're spilling into Saturday's session, and Bitcoin continues to be under pressure. Interesting, though, wasn't it just a few weeks ago that we were talking about Bitcoin as an inflation hedge? Well, the Fed is going to raise rates, isn't it, because of inflation? But it's not really played out that way. Coming into my Bloomberg terminal, look at this chart. The correlation between Bitcoin and stocks is growing. You see there on your screen a reading of almost 0.5. A 1 would be a perfect correlation. In other words, stocks and Bitcoin moving in lockstep. A -1, -1, would be them going in opposite directions. So Bitcoin is not behaving as an inflation hedge. It's not behaving as a haven asset on a day where we saw people pile into treasuries and yields come down. It's really part of this risk-off sentiment. And of course, that also extends to stocks, right? Companies that interact with cryptocurrencies or related to cryptocurrencies. And this is where we saw really heavy selling. Marathon, down 15%. Riot Blockchain, down 13%. Really heavy outsized selling. So the question begs, what is cryptocurrency, right? Particularly Bitcoin. Is it an inflation hedge? Is it a safe haven? Didn't appear to be on Friday, Emily.
All right. Thanks much. Well, the crypto industry has been growing fast, but not everyone is getting equal access to it. How to give more women a piece of that expanding pie? The crypto platform OKCoin just announced a $1 million commitment to reach the goal of 50% female customers by 2025. I'm joined by OKCoin CEO Hong Fang here now for more on this. So talk to us about this $1 million commitment. What in practical terms does this mean you're going to do?
Yeah, thank you for having me, Emily. We are in an industry that is very emerging, which means that we are seeing a lot of great people joining the space, promoting innovation, standing up to fight the status quo. We see a lot of female voices, strong female thought leadership, and leaders who are building new things. But at the same time, there is a very obvious gap in the number of people who are in the space from female versus male kind of ratio. So we feel very strong about making crypto inclusive, giving everyone this equal access to what is coming up in the next 10, 20 years and 30 years. So we want to do our share. So we are committing $1 million in the next few years to really help more women to get into this industry, which means that we are going to partner with different organizations to provide better education to women participants, who are going to provide sponsorship to developers working in this space who want to actually participate in this innovation wave. And we're also going to help with bringing in more voices to the world, because part of it is how to give people more access, but the other side is also how we describe it, how we present our industry, and how we present everyone in this space, even if there are differences.
Twice as many men as women own crypto, and it's a bigger gender gap than we see in traditional assets. Why do you think that is?
Here's my read. I think, first of all, crypto, as when it was started 13 years ago, when Bitcoin was created, it was created as the very native, the first native money that is very different from the traditional concept of money. So that in itself means that it is a break from normal mentality, normal mental framework. I think in general, if you really want to stereotype it, female tend to be more conservative when breaking away from normal way of thinking to challenge the status quo. So I think that's probably a part of the things that is playing a big role here. And the other thing is, again, it is a very new emerging trend. So it's possible that it hasn't reached as wide a audience as it should be over the long term. So it's up to everyone in this industry, every participant in this industry, to really promote the awareness, to educate. Because many times when I'm in this industry, I was asked, how do you feel about being the only CEO, female CEO of a global exchange platform? The truth is I don't really feel it, because I'm surrounded by 50% of female members on my team. So you don't really feel it once you're in it. However, it's very difficult to take the first step, to make the first leap of faith. So I think that educational piece is going to be really important.
How do you think the gender gap in crypto is reflected in the kinds of deals that are done, the way that investments are made?
I think if we talk about the gender difference here, there is a possibility of falling into stereotype. So at the risk of stereotyping gender differences, I would say that maybe females are more inclined to look at long-term value, look at what is going to happen sometime down the road, and male probably are more open to short-term trading activities. But again, I feel like that is a very stereotyping activity. I think over time, as you bring more and more people into this and raise the awareness, and also remove the perception that crypto is another boy club, I think you'll actually start to see more equality. And to be honest, we are in Miami for the week of Art Basel. And yesterday we had a women dinner that we're hosting. There are more than 40 women, female leaders, thought leadership, content leaders, builders, entrepreneurs who are at the dinner event. It was great to see a lot of smart, confident female leaders in the space. So it's also a matter of how we make sure that their voices are heard.
All right, well, it's good to meet and hear from another female voice in crypto. Hongfang, OKCoin CEO, thank you for joining us. Meantime, Wikipedia is entering the NFT game. Jimmy Wales, co-founder of the free online encyclopedia, is selling a non-fungible token based on his first edit of the website, which reads, "Hello World." Auction house Christie's will take care of the sale of the token alongside the Strawberry iMac that Wales was using around Wikipedia's launch. The funds will go toward charitable causes and WT Social, a donation-backed social network that Wales launched in 2019. Coming up, DIDI'S delisting could have broad ripple effects through China and maybe even U.S. markets. I'll speak about that with Race Capital's Edith Young, plus get her take on the future of crypto. That is next. This is Bloomberg. I want to get back now to Didi and what it means not only the company, but also China and Wall Street. Joining me now, Edith Young. She is a partner at Race Capital. Edith, boy, Didi really taking a beating. We're we're expecting them to relist in Hong Kong in a few months. But what does this mean?
I think it's really, really sad to see what's going on. But there's a few things that's happening. One is, just because they announced that they want to get listed on the Hong Kong Stock Exchange does not mean that they will get listed. So the original, there's some record that only 20-30% of the rise 100% compliance. Hong Kong listing rules are actually quite vigorous, so it doesn't really mean that they will get listed. But what's really interesting, I think, longer term for Chinese companies, the exit route or strategy probably will actually focus on more Hong Kong. If you look at the BAT, Baidu, Alibaba, and Tencent, all of them are actually listed in Hong Kong. And very likely, if we think about ByteDance, which is now valued $400 billion, or companies like Lala Move, there's a lot of really interesting Chinese companies probably won't get listed in the US anymore. And especially if you think about Chinese companies are really walking on the eggshell. To please Chinese government, to please US government, they really sort of get caught in between. And now slowly more of center of the universe for exit will be Hong Kong.
So how many more companies do you think we're going to see this happen to?
It's hard to say. I think particularly Didi, because there's so much sort of transportation data, sensitive data. So what's going on? Didi is particular, very, and by the way, even though what's going on in the stock market, they still have 70-80% of the market share in terms of ride sharing in China. So I think we'll see more and more Chinese companies, if not getting delist, at least get dual listing in Hong Kong, so to sort of spread the risk. But we're talking about hundreds of Chinese companies that is listed in US on New York Stock Exchange, or on NASDAQ. So it's going to be quite a number of companies. 2022, there will be really interesting to see what's going to happen.
What does that mean for the valuation of these companies? Are you expecting to see Didi take a huge valuation haircut?
Well, just to begin with, since June, they were listed at around $14 and already dropped more than half. I think today is between $6 to $7. So it's already dropped quite a bit. And historically, a lot of the Chinese companies really would prefer get listed in the US because the US, sort of the retail investor really understand tech. They have a bigger appreciation. And a lot of times, Hong Kong particularly, really require companies to be profitable. So I think that valuation would get impacted more or less is because, we see like the Alphabet and the Meta of the world is all listed in the US. But yeah, it will definitely impact in terms of valuation for many Chinese companies.
How is this impacting the choices you're making and decisions to invest in one company or another, a company that crosses borders or a China-focused company?
I think, regardless, I'm still very bullish on China as a whole. This is the second largest economy in the world. It is a parallel universe now, not only for internet, but also in terms of stock market exit. Having said that, there's still like great venture fund like Sequoia, Qualcomm, Matrix Partner, all these guys are still actively investing in China. So I don't think is a market that we cannot ignore this market, but I think we need to be very, very careful and think twice when a company, there's really no true cross-border company per se other than ByteDance. But as an investor, if you want to invest in Chinese companies, you just need to think about longer term exit probably will not be in the US, but rather be in Hong Kong.
We were just speaking about cryptocurrency earlier, and I know you're an investor in crypto as well. We've seen a lot of volatility. We've seen a sell-off, especially at the end of this pretty roller coaster week. What's your take on what we're going to see through the rest of the year and trends you're watching into next year?
I'm excited about crypto. Raise capital, really focus on investing in infrastructure software, regardless it's enterprise, Web3, data. On crypto, I think a few predictions, just to begin with. For the last 4 or 5 years I've been in crypto, I see 3 crash, and usually that happened early in the year, probably January or February, that will be another crash, but it's typical, another day in crypto. But what's really interesting, I think, in the last 2 years, right now, combined crypto market cap is 250 billion. And I think that will continue to rise. 2.5 trillion. So in that sense, and that's growth from 250 billion in 2019. My prediction is probably will go up to 3 trillion. And then on top of that, probably I think there will be a crash for Bitcoin before it go up to 100,000. I'm counting on that. And then also, we're very active in the DeFi space. Right now, it's about 100 billion in total lock value, TVL. My guess will get to at least 200 billion. I'm very excited about that. And then my also guess is prediction will be maybe China will turn around in terms of Bitcoin mining, but it will be highly regulated. And hopefully, Jamie Dimon will turn around and provide custody solution for his customers.
Those are quite some predictions, Edith. We appreciate them. You mentioned the China crackdown. Do you think that regulation, a regulatory crackdown in the United States could slow that down? Could mean some of your predictions won't come true?
Well, I think in my head is a great thing that U.S. is trying to regulate. I think longer term is a great thing for retail investors. I think all projects should be compliant and abide by KYC, AML is a really great thing longer term, because regulation to me is a blessing of this industry, and it's here to stay.
All right, Edith Young, partner at Raise Capital. Always good to have you here, Edith. Thank you for joining us. Well, in other news, Bloomberg has learned spyware from Israel's NSO group was allegedly used to hack the mobile phones of at least 9 U.S. State Department employees. The hacks targeted officials based in Uganda, focusing on issues concerning the East African country, according to Reuters. Victims were notified by Apple, which didn't name the creator of the spyware used in the attack. Coming up, 2021 has been a banner year for the Indian startup scene with record numbers of IPOs. We're going to take a look at what 2022 holds for the country's tech sector next. This is Bloomberg. 2021 has been a breakout year for India's startup scene. Tech companies going public have raised record amounts of cash, but they now face unique challenges to grow even bigger. Bloomberg's Quick Take has taken an in-depth look at the state of play.
Bangalore feels young and youthful and eager to experiment. Bangalore is actually called the Silicon Valley of India. About 42% of India's startups are born here every year. It has become this thriving magnet for talent.
India's startup scene is booming. This year alone, the country has seen over 36 unicorns, private companies valued over $1 billion. And much of this impressive growth has happened in record time.
The last decade and a half, it's a sea change. We live in such a different world today. I think in 2006, if you said we would have 10 unicorns, let alone close to touching maybe 100 unicorns, that would have looked madness.
From last September to this September, there is on an average 3 unicorns every month. So it's a clear indication of ecosystem maturing.
India has had a record year of IPOs. But with a recent stock launch faltering and fierce global competition, can Indian startups keep up this breakneck growth?
Unlike in the old days when we had to build everything from scratch, today a lot of the infrastructure for creating a company exists. The challenges will be how to succeed in the business before somebody else does better. So speed and execution is becoming even more vital.
So India's technology story goes back at least 5 or 6 decades when the government decided it needed a strategic location to start a whole lot of defense-related technology companies that would serve government's armed forces. Since then, Bangalore became the location for a lot of those companies, and to support them, a lot of educational institutions have come up in and around Bangalore.
The government chose Bangalore as the place to build its defence industry, as the southern Indian city was considered a safe distance from its rival countries Pakistan and China. In the early 80s, smaller private companies also began to shift their operations to the city, among them Infosys. In 1981, with initial capital of $250, 7 engineers set up the business, marking the beginning of the private tech industry in India. Today, it's one of the biggest companies in the world, with a market capitalization of over $95 billion.
Infosys, in some sense, is India's original startup. When Infosys began in 1981, it was in a socialistic era when India was not really that friendly towards business. And we had many, many challenges. For example, just getting a telephone connection would take 2 years. To import even a single computer, you had to go to Delhi to get a license. And even if you had to make a small change in the configuration of the computer that you purchased, you had to go back and get the license changed all over again.
Then came economic liberalization in the 1990s. The government deregulated markets and reduced taxes and import tariffs. Infosys and other IT companies thrived. In 1993, Infosys went public and built India's first software campus in Bangalore. Prompted by this technology boom in the 1990s, people from all over India poured into Bangalore to work or study.
Just some of our special report there on India's tech startup scene. You can catch more at Bloomberg.com and on Bloomberg Quick Take. And that does it for this edition of Bloomberg Technology. Stay with Bloomberg. My colleague David Weston is next with Wall Street Week. I'm Emily Chang in San Francisco. Have a wonderful weekend, everyone. This is Bloomberg.